All right. Welcome, everybody, to the monthly Be the Bank broadcast. I'm filling in as Justin Bogard today, so maybe I have a little bit more hair. I don't know. Um, Chris, Jay, Dan, how are you guys doing?
Doing well.
Good. No complaints.
Nice. I'm not going to do all the bells and whistles that Justin does every month, so you can throw tomatoes at me for that or something. But yeah, so I thought today after we introduce ourselves, we could go around and talk about a recent win we've had in our note investing and real estate businesses and also a challenge that we're facing. But before we get there, Chris, why don't you introduce yourself?
Why, thank you, Jamie. I am Chris Seveney with Seveney Investments. Been in the note space for 8+ years and currently run a mortgage note fund open to both accredited and non-accredited investors.
Fantastic. Jay Redding, who are you?
Well, I'm Jay Redding. I'm based out of Fort Wayne, Indiana, and we buy both performing and non-performing notes, and focus primarily in the seller finance area.
Awesome.
Yeah.
Dan, how about you?
Yeah, and I'm Dan Deppen, based in Colorado. So I've been buying notes for about 8 years, both performing and non-performing. And then also the owner of Call the Underwriter. I'm an RMLO helping people originate seller finance notes.
Fantastic. All right, we're going to go in reverse order. So Dan, tell us about a win you've had in the last month in your business.
Yeah, so one win, I don't know if I should claim it as a win just yet, but I've got a property that the foreclosure is just about done. The borrower left and it's vacant, had it secured. And it's worth a little bit more than I would have expected in the circumstance. So once we actually get through the whole process and get it sold, that should eventually be a win.
Awesome. Was that a non-performing note when you bought it?
It was like a sub-performing note when I bought it that became hard non-performing as soon as I bought it, which seems to happen. Yeah.
Right. Right. But if you buy right, you still should be okay, right?
Yeah, it should be fine. And there's even some options if I want to put money into it. Could potentially do better, but don't know that I want to take on long distance rehab work. When I've tried that in the past, it hasn't gone well. So
that's a nice teaser for the case study that I'm going to present.
Yeah.
It's almost like we teed that up. But Jay, how about a recent win in your business?
Let's see here. A couple things. We are about to close on 4 Texas notes, 2 tomorrow, 2 on Friday. And we hypothecated 2 notes earlier this week.
Awesome.
Yeah.
You're just cruising right along. That's fantastic.
We're trying to be consistent.
Yeah. All right. And Chris, what's your big win for the last month?
The property we renovated from afar out in the Las Vegas area, we closed. It was one we did a prior case study here on, and we ended up getting that liquidated and sold within, being on the market for like under 2 weeks, got it under agreement and sold. So
Awesome.
That was a big win, and a lot of things we learned. And again, I've always been in renovation, but renovating afar, I picked up a lot of good tips to take into some of the ones that we may have to use moving forward.
Nice. And that was a pretty good ROI for you?
Yes, that was a very good ROI for us compared to selling it as unrenovated. We would have made a little bit, but the returns were enhanced significantly by making it owner occupied ready.
If I remember, you put about 140K into it, which was actually not very much relative to the purchase.
Yeah, so it was about a 2.5x return on what we put into it. So,
wow, that's hard to come by, especially from a distance. All right, back to you, Chris. What's a challenge that you're facing in your business right now?
Man, I actually just had this challenge in my head, and then it just kind of completely slipped off of.
First sign, man. First sign to get an order.
I do hit a big number this year, so
we can skip. We can come back if you need time.
Yeah, come back to me because it will hit me again. But
Jay, other than logging into the StreamYard to do this
That's
broadcast.
always the challenge for me for some reason. I don't know why, but it's
Pick
whatever.
something that's not a regular challenge for you.
Okay. Honestly, right now, the number of deals that we've got come in, both fulls and partials, capital raise, and keeping the capital raise to keep up
Mhm.
as the deal flow's coming in. So
Yeah.
it's as you well know, it's always the
Mhm.
challenge of the balancing of each, and we've got really good deals that's coming in, and we're getting them closed, and then we got to turn around and get the capital raise to hypothecate
Yeah.
back out on them.
Yep. I didn't come up with this, but I've talked about it many times with the 3 legs of the stool, or raising capital. The second one is finding deals, and the third is managing the capital and the deals. And it's like, somewhere one of those 3 is always the pain point, at least one of those 3. But yeah, balancing the capital and the deals. If you don't have a problem on one of those 2, then you're probably not scaling correctly.
You're not being active enough then. Yeah.
So yeah, I can empathize with your pain there. Dan, how about for you?
Yeah, for me lately, it's just been dealing with some flaky buyers, even
Okay.
some larger, like institutional type
Interesting.
folks. Things that used to go like really fast for some reason just seem to be struggles for folks. I'm not totally sure why.
Okay, so you're not sure if it's like they're not finding the capital, or they're finding issues in due diligence, or just multiple reasons?
Yeah, just getting wrapped around the axle
Mhm.
in due
On little
diligence.
things.
Either not getting it done, or in some cases being worried about things that are
Right.
not really things, but then not like getting back to me with like what's going on. Like some of these, like I have one person that's just grinding, and I'm not sure exactly what the heck they're doing. The only reason I'm giving them this much rope is because it was a good offer, but I'm about to tell them to,
Go pound sand.
shit or get off the pot pretty soon.
Right.
Yeah.
Gotcha. Yeah, I was curious because I just I guess you could say this is my win, but we just agreed to sell a small tape to one larger buyer, and we'll see how it goes. Maybe next month that'll be my challenge that I'm facing. But Chris, was that enough time?
It was. Thank you.
Good.
Good.
His long-term memory is good.
Yes.
Right.
Nice. So we've got this one asset that it's part of a probate. They've supposed to sell it. It's been a challenge, and they finally got an agreement. It was supposed to close like 3 weeks ago. Then it got held up. The title company is challenging. The estate is challenging. They were supposed to close last week. Then the borrower is traveling this week, and it's a 7-figure sale, which we're getting, the money, basically all the money's coming to us. So, it would be nice to have this money in pocket and have this deal closed, so we can again turn around and reuse that capital, of course. And it's just been, a struggle the entire way, where you think things that you could never in a million years think of how something could be a problem becomes a problem. So
yeah, it's interesting. You worry about things that might become problems, and they don't turn out to be an issue, but then you can't predict the ones that do become problems, whether that's in investing or life in general. But people didn't come here for life advice. Before we get to the case study, anybody have anything as far as just kind of what's going on in the industry? I know DME is coming up in a few weeks here. Anything else, highlights or lowlights across the industry anyone wants to mention?
No investing tools. Tracy and Fred Ruy, they just published out the seller financed numbers for 2024. If you get a chance for that, if you go to their website,
I like that.
It's a lot of really good data. 30 billion. That's a B. 30 billion was what was created of seller finance notes in 2024.
Wow.
Yeah, my big takeaway from that report was seller finance activity increased a bit over the last year versus the drop in activity in what I would call the more like traditional sale market. So on a relative basis, it got bigger.
Yep. Well, the old adage is that seller financing fills the gaps that that the banks leave behind, and
Right.
they're leaving a lot behind right now because
Mm-hmm.
they're really tight underwriting is taking place. So
That
Yeah.
liquidity issues, there's
Yeah.
a lot of, we're seeing a significant increase in defaulted loans that are investor type loans. So loans
Yes.
that were rentals,
Yep.
rehabs, seeing a lot of that. Literally, we just bid on a $77 million pool yesterday, and today I got another $65 million pool, and there's another $11 million pool that bids next week, and we're seeing like 200 million just a month in those types of loans.
Wow.
Seeing a lot less on the owner-occupied stuff. We still see that, but those interest rates, because they're screaming so low, the numbers aren't making sense yet for us, for non-institutional investors.
Got it. But
Chris,
to put on, oh, go ahead, Jay.
No, my question is, Chris, a lot of those rehabber loans, well, we all know the difficulties that rentals are dealing with right now.
Mhm.
All right, that's happening. But on the rehab loans, I'm just curious. I'm assuming a lot of those they didn't get finished up. They ran out of money, cost overruns, or the scenario where they couldn't get them sold, and now they've extended, and now they're just not going to extend anymore.
It's a lot of what I've seen. It's a mix. We've been looking at the latter, which is they're done, they're completed, but the current lender, gave them an extension. They don't want to give them another. It's sitting on the market. There was a pool that up where Dan is, I think it was a lender or a borrower who owns 180 properties. And there was like a pool of 8 of them that he's got them on the market for sale, he or she, and they just haven't sold yet. And they're, they mature on 5/1 and the lender does not want to give another extension.
Those are in Colorado?
Yep.
Yeah, the market is, I mean, I'm not as tuned in to the market here because I actually don't really do much in this state. But
Yep.
yeah, from what I understand, the market seems to be kind of frozen up a bit.
Yeah. So, but to your point, Jay, some rental loans, Florida, Texas, have insurance and taxes have skyrocketed. So you see some of those where the rentals just don't make sense. So people are trying to default. And then some of the fix and flip stuff, we've got some loans that people got 80, 90% through, and the lender doesn't want to either give them any more money or they just walk from it. And, we've seen some of those as well.
Yeah. I actually have a fix and flip right now that's in default, but I've given them in my self-directed IRA. It wasn't that much money. It was only like 30 grand, and I'm the first lien holder on a separate property that they owned that's worth at least 50, 60 grand. So they've got it on the market. I'm not really too worried about it. I mean, it will sell. All right. But if it gets, if it gets like 6 months to a year behind, then that's a whole different ballgame. I'll probably pursue it, but I'm not necessarily looking to screw them over. All right, in that respect, I shouldn't say screw them over because it's really not, because they've not performed. But at this moment in time, it's not worth the hassle to go through the foreclosure process at this moment in time for that small amount. I'd rather just wait and see if they can get the house sold, and if they do, great, I'm paid off, because there's plenty of equity in the house if they get it sold.
It's not one of the nice things about this business, right? You have options usually, Jay,
Yep.
right?
Yeah,
Discretion.
you have a lot of options. Yeah, there's a lot of options, a lot of discretion there.
Guess you don't need your IRA just yet.
Oh no, it's in my Roth, so
Yeah.
I'm not touching that right now anyway.
Right.
So
Got it. I know if you were as old as Chris, that might be a different story, but just kidding.
yeah,
No, wait, that's just his memory. Sorry, not his
that's just his memory. Yeah, there you go.
Awesome. Well, I didn't prepare slides. I decided for this case study to fall back on an old one that I've got, still relevant. It's got a lot of moving parts to it, and some of the numbers may not, make sense for this year per se, but I think the lessons we can learn from it are still tangible and applicable. And I can give an update as well. But so feel free, guys, to ask me questions or point out issues. And I never have to give Chris permission to do that. But everybody on here, feel free to make this interactive. And if anyone has a question on the broadcast, pop that in as well. So basically with this note, it may have been my first true non-performing note that I bought back in the day. And this wasn't that long ago, about 6 years ago, actually 6 years ago this month. And I'd bought some performing loans and kind of gotten my feet wet the prior year, and decided to really kind of dive in the deep end a little bit and buy an NPL in Florida, no less. So we purchased this note that was in Jacksonville, Florida. By the way, if you go to our website, LabradorLending.com, go to blogs, this is on there. There are two different blog posts. One for the initial one, this one that we're going to go through, and then there's an updated one as well. Not trying to sell my own stuff, Justin, but that's where the blog post is. So purchased a non-performing note in Jacksonville, Florida in April 2019 via paperstack.com. The purchase price was $46,500. UPB was over $93,000, and the total payoff was considerable, $132K. And the property value at that time was estimated to be about $125,000. There had been a trial payment plan, a forbearance agreement that the previous note holder had in place, and the borrowers had negotiated a reduced payment of $400 for 3 years. So that was a huge reduction in the P&I, and they performed during that, but then stopped performing. And then the last payment made was in February 2019, and there was only one payment made over 2 years, and the last contact with the borrower had been the prior year. So there were obviously issues with this as far as being a performing loan, and the borrowers showed that they were able to perform with a much lower payment. I don't know. I'm curious to get your guys' input on trial payment plans and how you do those, if you do those, and do you ever offer like a much reduced payment, or how? Just curious if anybody wants to chime in on that.
I think it totally depends upon what the situation is and why have they defaulted. Is it a short-term glitch, or is it because of a long-term situation that they're not going to be able to overcome?
Right.
I would be much more inclined to, rather than having to go through the foreclosure process, to go a trial mod at a lower price.
Mm-hmm.
But if it's something that we would determine would be temporary, all right, that we'll just say a loss of a job. Okay, they were like they got behind and now they're back. They've got a job now, maybe not quite as high.
Yeah.
We would reevaluate all of that and maybe do a forbearance, put it on the back end, bring them current, and move forward from there. Is what we do. But we would do it certainly underneath of a trial, at least a 6-month trial basis.
Mm-hmm.
And then if they don't perform at that, then we'd probably go to foreclosure.
Gotcha. Chris or Dan, any?
Yeah, what I do is kind of similar, and same as Jay, it's kind of situationally dependent.
Mm-hmm.
I mean, usually my trial payments are either the same as the old payment or higher. I don't know if I've ever gone lower. I probably wouldn't go lower unless the borrower had like a good story and they said, well, my income level's here, and like that's what they can afford.
Right.
Yeah.
Right. That was my thought too. I've never done a lower payment because that doesn't really show that they have the ability to repay this actual payment. So, Chris, any thoughts on that?
I have done a lower payment once, and the reason was because the borrower was in bankruptcy, and I wanted him to get through bankruptcy because then all his other debt would have been wiped, and then once bankruptcy finished, it would go back to that old payment.
Okay.
But I had an analogy I used on a webinar today of the difference between a TP trial payment plan and a mod, and I'll just share it, get your opinions. Sure. It's like watching a movie and hitting pause halfway through the movie. That's a trial payment plan. You're just pausing to see what go make your popcorn or whatever it is, and then you come back, and if it works, if it doesn't work, you just hit play again. But if you hit stop or modify the loan, then when you go back, it's not like you got to watch. You can start watching a movie from where you're at. You got to start back at the beginning, and that's why you typically want to do a trial payment plan first, is so you can just hit play and not have to have more legal fees and start that whole process again.
Exactly.
Right. Yeah. Makes sense. So back to the case study, the homeowner had apparently been claiming that they were going to refinance the loan, which, rates were lower back then than they are now. And that seemed more possible, more likely than it might seem now with today's market conditions. And obviously a refinance would bring about, a full payoff ideally, which would be fantastic. Although not sure how they would be able to do that with the property value being less than the total payoff. But refinance didn't materialize. I think the borrower was just trying to buy time. We started foreclosure. And obviously, as you guys know on here, that Florida foreclosures can be time consuming and expensive. Then out of the blue, the borrower's relative, contacted our third-party note servicer indicating that he'd been paying rent to the borrower and was unaware that the mortgage payments were not being made. So, and this only happened because we started foreclosure and a demand letter is sent, and somehow, the occupant catches wind of this. And so, yeah, it turns out that the borrower had been collecting rent for years and not paying her mortgage payment.
It's not uncommon.
It's not
No.
uncommon. I've had
that happen more than once.
Yeah.
We've
Yeah.
got 4 of them right now we're working on.
Yeah.
I mean, I had one where that was the one where I was physically present in court. The one I think I presented on the last month.
Uh-huh.
And we get to the end in front of the judge. The borrower's like, I get judgment, and the borrower's like, hey, I got a renter in there. So yeah.
Gotta love it.
Like I say, so the question, my answer would have been so.
Yeah.
That's between you and the renter.
Right. Yeah. I don't know if you remember, Chris, there was that kind of crazy lady.
Which one?
Which
that might
one?
not help. That might not be enough of a context clue, but
The one in Michigan or the one
Yes.
in Maryland
in Michigan.
with the mattresses or
No. This was like in Flint.
Flint? Oh yeah,
But she
like
would
3343 or something.
no,
The numbers.
but I don't know. But if she wasn't making her mortgage payment, but if her tenant was late by 5 days, she would show up screaming, as far if he didn't pay the rent on time. So I don't know, felt a little odd, but all right. So anyway, through our law firm, we communicated the intent to foreclose. Borrower contacts our law firm indicating that she's willing to deed the property over to us. And obviously in that case, we would now own the house and not the mortgage. In this scenario, a deed in lieu of foreclosure, it can be good for all parties. In this case, we avoid the foreclosure time and costs involved with foreclosing. And again, in Florida, that can be extensive, both time-wise as well as the actual dollar amount. And then, the borrower avoids having a foreclosure on her record and avoids that whole process as well. So it doesn't always make sense and it doesn't always work, but I think in general, a deed in lieu is typically better than a foreclosure. Would you guys agree with that?
As long as the title is clear.
Yep. Yes.
Sure. Good
Yep.
point.
That'd be the very first thing I do to see whether there's any other liens that are on there that
Yeah.
we're willing to accept or not. So
I would say in most cases, and could be different opinions here, but in most cases, a good foreclosure attorney is going to pull title beforehand. But yeah, that's a good point.
Yeah, I know some people, sorry, jump in, who don't use an attorney on a deed in lieu. And I remember like my first deed in lieu, we were getting ready to do it. And then I realized I'm like, oh, I never checked title just to see. And I had the title report from when I bought it, and it was like 8 months later, and the attorney actually had one for pulling the foreclosure, but it was still like 2 months. And we pulled title, and literally the property manager, because they were collecting rent and not paying the mortgage, slapped like a $10,000 lien on the property.
Wow.
And I'm like, glad I didn't take the deed in lieu.
Yeah,
Right.
I had one time where one of the co-borrowers passed away. There was no probate or anything. And then the other borrower was willing to sign the deed in lieu, but we had to do the foreclosure process to clear the other borrower off the title.
Interesting. Yeah, I actually, now that you say that, in this case, I believe her husband actually had passed away. but that didn't become an issue for us.
Which I felt a little bad for the guy because he was willing to sign off on it, but just because the way we had no other choice but to do
Interesting.
that.
I'm surprised that there isn't some legal procedure that can, obviously that's not the first time that's ever happened, but I'm curious, there's not some type of legal procedure through probate that might be able to take care of that.
Yeah, I don't know. That was
Yeah. So in October of 2019, we did an interior property inspection, and we were pretty pleased with the condition of the property. It's an older property. I think it was maybe 1956 it was built, but for that age, it was in pretty good condition. Although I do recall the tenants they were living with bed bugs, etc. It wasn't the greatest
fun times.
Yeah, personal living conditions, but the property itself was not in terrible shape. So I started, my game plan with non-performing notes is almost never to go after the property to hold it, and I had no intent of holding this property as a rental. I started looking at the Jacksonville rental market, especially at that time, and the underlying economic data, and I just couldn't sell this property. I was like, this is too good. And we'll get into some of the numbers in a little bit here, but basically we decided that we gave the occupants 2 months to move out, which is, in my opinion, a fairly long amount
It's
of
more
time.
than fair.
Yeah. And quite frankly, we're not that we're in the process of, or in the business rather of trying to kick people out of where they're living, but really were no other options here. And honestly, I felt like in this case, these people needed kind of a reset as well, just based on kind of how they were maintaining their own living standards. But so eventually they did move out, and we researched property managers, and actually, sorry, in November, the occupant said he was not going to leave, and then eventually he did move out. So you can read this here. I'm not going to read every word for you, but as of mid-December 2019, we were all in for just about $50K, and which is obviously went up after that, but and the property value was estimated at that point to be about $135K. So I'm looking at different options here, and it looks like, basically I ran the numbers, decided that I wanted to hold this as a rental. So 3 takeaways, and then we'll get into the numbers more. Although these returns are not typical, investing in non-performing notes can be highly profitable. Note investing can be a win-win-win. I think, in this case, and we'll get to some of this in a little bit, but we made money on the deal, and just a little teaser, we ended up fixing up the property, adding value to the community, and also doing the deed in lieu was better than a foreclosure for the borrower. And hopefully the occupants, the tenants, got a fresh start as well. So we didn't actually hit the 2% rule, but which was is almost unheard of anyway. And I do have pictures on my website, LabradorLending.com. If you go to the blog post, there are pictures you can go through. So we got access to the interior in January 2020. And as many real estate investors can attest, there are many surprises often when you get into inside.
No, wait, did you get access prior to the deed in lieu or only
we did
after?
get access, yes. And we did, we did the whole broom swept condition for them to leave. I don't recall if it was truly broom swept, but they didn't, vandalize the property or anything like that. So left on, we'll say decent terms. So I've done rehabs locally, in Maryland, but I've never considered a rehab, at a distance. And I think in some ways we got lucky, but a lot of it was just finding the right people. And, I still have Suncoast Property Management is still my property manager down there, and they still manage this as a rental for me, but they were able to get different bids on the project. And so we did rehab this property from a distance, and it turned out quite well. At the end of the day, this property, you can read a lot of these numbers here. At this point, when I wrote this blog post, we had about 75K into the deal. And let's see here. Yeah, again, just looking at different options. I ended up putting about 30K into the rehab. And so we had a little over about 105K into it after the rehab. Did an appraisal, and you can click on this analysis here. It comes up as a PDF for those who are really like numbers. Let's see here. You guys can click on that. And I know we had about 105K into it after the rehab, and then I got an appraisal done it came back at like 170. Zillow currently shows about 158 for this property. So I was able to refinance, do a cash out refi, and pull all of my money out of the deal plus I think it was about 30K. And so there's lots of before and after pictures you can see on here. It's a 4-bedroom, 1-bath. These were before pictures.
Oh,
And they're actually not super well organized on the site now. We switched sites and it's not actually as good. But this white here that may be hard to see in the upper right is the newer. It's post rehab, and
Sure.
then this was prior. So some of the numbers are pretty good. We didn't hit the 2% rule, but the property currently rents for $1,400 per month, and it's been a strong rental for us for sure. So I've held it for ever since we foreclosed, ever since we got the deed in lieu, I should say. And again, I was going to sell it, and I still could sell the property, but I just kept it as we switched entities. I bought it in one entity and moved it over to my rental entity, or one of the 2 rental entities I have. And it's been a strong performing rental property ever since then. So anything you guys can see that you would have done differently, or any questions or takeaways?
I'm betting the value has probably at least doubled since you.
Yeah, I mean, since that appraisal I did that cash out. I actually did. Let's see. I did a cash out refi. I don't remember when the
Was
appraisal.
that in 20? Was that 2020?
I don't
when you
recall,
did
to be
that?
honest with you.
Okay.
But it's definitely not gone down.
No.
So
Maybe I missed this earlier, but when they did the deed in lieu, what did they owe versus what the property was worth at that point?
she owed approximately $132,000, and I think on paper before we got inside, we were estimating it was worth 125. The property, I think in reality, it was not worth quite that much. I mean, that's pretty common in this space, but I think in reality, it was probably worth 105. But then we put 30K into it, and then it appraised for, again, I think it was 175, something like that. I can't recall exactly.
Okay. Yeah, I was just curious if she could have just sold the property.
Yeah,
on
it
her
was
own,
slightly.
because
It was
borrowers
underwater.
never do that. Like I've had some where
Yeah.
borrowers had a lot of equity and they're just like, nah, I'm writing the ship down. Like,
Right. Yeah. I think it was very close, and it was probably underwater in this case.
Okay.
So, and if anyone's really interested in the numbers as of a couple of years ago, you can click on that analysis link, and check it out. So again, I mean, I think there's so many moving parts to this one. That's why I liked it, especially since it was pretty early on in my note investing career. It was just, non-performing note in a judicial state that is slow and expensive. And, but we did buy it right. I think the price was decent, and that helps give you options. And then, deed in lieu, I've got a tenant living in the property, and so we had to allow them to
Vacate. Yeah.
vacate. Thank you. That was the word I was looking for. And man, you're good with word retrieval, Jay. Even you know.
Only one word things. That's it. That's as good as I get.
Was there an option to leave the tenant in there and just leave it as is, or were they a relative? Was that going to be?
They
weird?
were a relative. They were a relative. Yes, but I'm not sure I really considered that. You know, I guess we wanted to get in and rehab it. So, and I think once it was like the bed bugs really put it over the top. I'm like, we got to get everybody out of here, and just it didn't need any structural work per se. We did a new roof and things like that, but it was fine from a structural standpoint, but it just needed a good, you know, interior rehab. And then again, it's turned into a rental property. So there's a lot of moving parts. I mean, I don't necessarily recommend. I know Chris's case study was a long distance rehab. It's not. I mean, it's very easy to lose money doing that. So I don't present this as this should be your business model, you know, going forward. If you're a new note investor and you want to dabble in NPLs, typically we don't do this. We do enough. We do a trash out, and we do, you know, maybe a little bit of yard work, possibly some paint or something, but just to sell the property, just because that's our. I don't. Real estate is way too local for me to be in a nationwide rehab, you know, business. So in some ways, I think the market helped us, and buying right helped us, and just finding the right people on the ground. I mean, that's critical, is finding the right boots on the ground. And I trusted this company, and it worked out well. And again, Suncoast is still my property manager, and they manage 2 properties for me in Florida. I will say I've never been to Jacksonville either. So I've never seen this property. I've never even been to Jacksonville, Florida. But yeah, so all around it was a win-win-win. I will also say that the case study I was going to do is not nearly as you know, amazing from a numbers standpoint. So maybe my next case study in a few months will show one that's not so great on paper, because that does happen.
Yes.
I think you should take a trip down to Jacksonville to take a look at this, Jamie.
You think so?
I
Yeah,
think
while
that-
you're down there, I just
isn't
got,
that a business expense? I think so.
and
You have
I just-
any property.
I just got an NPL in Jacksonville that you could check out for me as well. So kill 2 birds with 1 stone.
I see where we're going.
Question for you.
Yeah.
So what was the time frame here? Like how many months?
Let's see. I guess it was it April 2019, and then we it's a good question. I think it was about a year and a half. Is that right?
Okay,
I'd have to look. Might not. I can't remember when we.
I wasn't keeping that close a track. That's
Come
why
on, Jay.
I was asking.
Yeah. I've got to double check on that one.
Okay. Well, is saying uncontested foreclosure in Florida, would you say roughly a year?
Yeah. Well, no. I mean, okay. I think estimated for that maybe 9 months. I don't know. And I haven't done one recently, but
what I'm getting to possibly another avenue, since buying a note right, particularly an NPL, buying it right, even though the amount that she owed with arrears and everything was quite close to the value of the property, you could have potentially taken that through the foreclosure and taken a little less than what her legal balance was and still made money, and possibly not have gone through the full rehab and everything.
True. And
But you mean to
This
sell
is
it at auction?
this is another angle.
Sell it at auction, Jay?
Yeah, for it to sell at auction, so you wouldn't have had to go through that whole process. I mean, that takes time calculating all that out. But I'm just from the audience standpoint, there's a potential another play there, and you're part of the process is evaluating which direction do we go, and executing that hopefully as efficiently as possible.
Right. But it seems like in that case, like couldn't you just if you're willing to do that, couldn't you just take the deed in lieu, skip the time and the legal expenses, and then just essentially like auction it to the local?
Yeah, just put it on
cash buyers yourself.
Wholesale deal. Just wholesale it. Yeah. Out. And you could probably have made money that way, and not had to go through the whole entire rehab.
So, and by the way, I'm looking. It was mid-December 2019. So I think they left the property in right around January 2020. So it wasn't even a
Okay.
full year for that.
Okay.
But then we did the rehab and everything. So
After that, sure.
and at that
Good.
time it was looking like we could rent it for 1,100, but now I'm renting it for it's 13.95.
Okay.
So but the other thing to mention too on what you're saying is that you could do a deficiency judgment as well if you're underwater, right? So
True,
on a
true.
judicial
Right.
state, you could pursue if you thought the borrower had any additional resources or assets that you could pursue. You are, I don't know if it, I think Chris, maybe correct me if I'm wrong, but I think it has to go through the foreclosure in order
Yeah.
to do that.
So deed in lieu's in certain states do allow, and I think Florida is one of them, where you can do a deed in lieu and still get a deficiency.
Mm,
Typically, you have to go through foreclosure.
Yeah.
Now with Florida, you cannot go after their primary residence, just like Texas is another state where the homestead exemptions don't allow you to go after their primary residence. So just because somebody may have a primary residence doesn't really mean that you can still go after them. I think Arizona is another state where if you foreclose on somebody and it was their primary residence, you cannot get a deficiency. So make sure to speak with an attorney to understand deficiency
Exactly.
rules in every
Interesting.
state.
Now the question on that, Chris, number one, does that deficiency? I know in most states, deficiency judgment typically lasts about 10 years. Okay.
Mhm.
All right. So you could you attach it to their primary residence? You just can't force them to pay. So if they're going to move or whatever, they've got to pay it. Can you do that?
In some states, yes.
Yeah,
You know,
okay.
in certain states, like you said, it can attach, but you can't. I've been in a state where I attach it to the primary, then went and foreclosed on their primary.
Yeah.
And then they, of course, stepped to the plate and, of course, paid.
Mhm.
Some states you can attach it, but unfortunately, you can't do anything with it.
With it.
So,
Can you guys see
sometimes
this?
it's a sit and sometimes it's just a sit and wait game.
yeah. Now,
Yeah.
what you mentioned, Jay, about 10 years, they're good for 10 years, but you can renew them.
Yes.
So
Yeah.
so you just have to, within that 10-year period, renew it for another 10 years or whatever.
Yeah.
Interesting. Can you guys see this, or is it difficult
Nope, we
to
can see it.
Yeah, we can see.
Okay. I'm not going to go through all the numbers, but this is what I put together initially when I did this blog post, and so they're not updated per se. But I think I ran this through a Bigger Pockets calculator rental calculator at the time. So
See, it looks like Bigger Pockets.
any questions on the here we go.
How accurate were your projections?
Well, the rent is higher than I thought.
I hope so.
Hopefully the expenses are lower.
Of course, the rehab, of course.
But most probably
But
not.
are they with taxes and insurance now?
Well,
That's the-
Yeah,
okay,
exactly.
I have had to put, just like any rental, you end up putting more into it over time, and compared to Maryland, the I'm just shocked at how the AC gets
The
abused.
cost of an AC. Yeah.
Yeah.
I grew up in Florida. Yeah, that's
Okay.
a cost of doing business, and
Crazy.
depending on how close you are to the ocean,
Mhm.
salt water
yeah.
is just vicious. Yeah.
Yeah.
Brutal on metal.
And I think I mentioned this previously, but I on both of my Florida rentals, I've been I just got new insurance, and it's so much lower than it was. So, but overall, it's been great. I mean, I would say both have been higher. The income and the expenses have been higher.
Sure.
You know,
I'm wondering if your cash flow, if you would seller finance this, would give you, I'm guessing, about twice as much monthly cash flow than what the rent will.
maybe.
All the analysis says that we have been doing in our own portfolio, as well as looking at others, the cash flow
It's just better if you sell it.
is much better. Yeah, it's about 2 to 2.5 times, and it's just because of the run up in the appreciation and value of the properties. You
Right.
look at your NOI, your NOI has increased, but the value has certainly increased. So if you look at your cap rates, you're looking at cap rates around 4, and it's like, crap, do I really want to hold on to it for a 4 cap rate?
Right.
And that's our analysis, that we're kind of unloading some of our low end rentals strictly because of that. The values have gone up,
Right.
And if we're doing a 4 cap rate, shoot, I can get 11% cap rate and seller
Mhm.
finance it with 15, 18% down. It's like, okay, let's do that. That's a better play long run.
I mean, I
Right.
guess so much of that would depend on your timeline, right? Because now you've got a depreciating asset. You're not getting
Right.
upside anymore on the balance. So like,
Right.
like
Right.
where I've seen like a lot of people do the conversion is where like they're close to retirement or at retirement
hmm
and they're kind of stepping back. Like if
Yeah.
you've got like a decades long time horizon, you know,
Yeah.
maybe you want to,
Yeah,
Right.
but
I
your
mean,
depreciation runs out.
it does.
yeah.
You gotta-
Okay. And
but
with 46,000, I think that's what you bought it at.
yeah, 46.
Okay, there's not that much depreciation you're getting with that.
That's true. That's a good point, and that is accurate. You're right.
Believe me,
Dan-
I'm in the
but-
same
yeah, but-
boat.
right, but Dan's talking about the appreciation of the property. you know, where-
Appreciation, but
you
you're
know.
paying the tax on that over time rather than
Yeah.
one shot.
right, but the note does not appreciate unless the market just somehow drives it up. But that doesn't.
Yeah.
That doesn't happen. So yeah, awesome.
You
Well-
want to hear a crazy deed in lieu story I'm trying to figure out right now?
Yeah, let's do it.
Sure.
So we've got a borrower who has a property listed on the market for sale, and it's in Florida. We're trying to serve him. He's hiding. We can't find him. So we're going through the foreclosure process and stuff. So I call the agent up, and the property's underwater. So I call the agent up, and I'm like, I want to make a full price offer on this property. She's like, what? I'm like, I want to make a full price cash offer on this property. She's like, okay. So I send her the stuff and so forth. So basically, threw in a full cash price offer on the property. And people are like, what do you mean? I'm like, well, I can't get in touch with the guy. And basically, when you look on the HUD, it's going to be my company paying this much, but I'm owed the lenders this much. So at the end of the day,
It's a wash.
it's a wash anyway. So instead
Wow.
of
I didn't even think about that.
instead of a deed in lieu, I could buy it and also get title insurance on it, and so forth. And I'm like, and told the agent, I'm like, yeah, he's gonna have to pay your fee, but it's just a way to try and get him to the table
Communicate.
or
yeah.
communicate, or at least get the agent to communicate and say, hey, look, you're underwater on this thing. I'm not gonna be able to sell this. I'm wasting my time. What are you doing? And
Right.
because this guy has a bunch of investment properties, and we've offered and said, hey, look, give us the deed in lieu. We'll just wipe everything out. We won't go after you for any type of deficiency. But
Interesting. So you don't know how that's. Have you gotten his
It's
attention?
still-
or?
not yet, but we're
Yeah.
working with the agent, and she's trying to get his attention too. But
Interesting. How does that? That reminds me of. It's like, I've never like in a foreclosure auction. Are you able to like bid on the property from as a different entity or anything like that?
why not?
Why not? Right? Yeah.
Yeah, I guess you could. I've never done it, but
Yeah.
I've never done it, and there's only one occasion where I've seen where we had a property that went to foreclosure, and we were actually a second, and it sold, and it was like a $300,000 property, and we were first was like 75,000, and we were like 40,000, and it sold. Our second sold for like 60 grand. I'm like, wow, somebody just got a killer deal on this. It was a beautiful property in Michigan, like 3,000 square foot colonial. I mean, it was a nice property, and I was like, damn. But there's also many times when somebody outbids me at foreclosure, I'm like, praise the Lord.
Thank you.
Yeah.
yeah, usually I want them to sell. Like I'm
Yeah,
playing that
exactly.
game of trying to where to set the bid where like I'm okay with it.
Yeah.
Yeah.
It sells for because I've had them sell for like $1 over what I bid. Yeah.
And that's
Right,
where people
exactly.
and people are like, why didn't you bid full payoff? I'm like, because if I take it back, then I got to pay a realtor, I got to carry the taxes, I got to carry insurance. I'm like, $100,000 auction. I'm like, I'll take 80 for it because then I don't have to pay any of that, and I got my money today. I'm not worried about trying to sell it and waiting another 3 or 6 months.
But if there's
you're
clearly
made whole,
equity-
you're made whole and make a little money along the way. Yeah.
Yeah, but if it's worth like 100, 110, I might not. Again, how far do I want to push that envelope? So
right. Because I bid full legal balance, on one recently, and it sold for just over our bid. So I was like, I think it was worth more, and I felt like I probably should have bid on the property a little higher. But you're not in that case. I wasn't allowed to from my entity. I'm not allowed to go beyond the legal balance. So I was like, why couldn't I?
Yeah,
bid
someone
at the
mentioned
auction? You
And I
know?
thought you could as long as you brought the cash to closing.
Oh,
Like if
well,
Yeah, that was always my understanding. I've never
okay.
tested it though.
Yeah.
But-
Yeah, you gotta bring the cash. There's no question about that. But maybe you just go and have someone else represent you, or
Mhm.
have a financial friend go and buy it for you.
Right. Well, I was asking those questions, but it's all state dependent too. But
True.
what I was told was legal balance was as high as I could bid. So
Maybe you could try like a Better Call Saul type approach. Have like 3 people show up at the auction and all start outbidding each other by
Right.
$1. So everybody's like, "Oh, what am I missing? Like this must be good. Like
FOMO.
this must, yeah."
Create some buzz. Yeah, for sure.
Oh, that's good.
Awesome. Well, what else is going on, guys? Who's got something to talk about? Chris,
Ju-
you got something?
I got just an anecdote.
Okay.
So I have this one where borrower was way delinquent, and the land contract basically had these like illegal late fees in it, and for some reason the servicer wouldn't let me just waive the late fee, so it was like a 30K balance and 30K in late fees.
Oh, jeez.
Wow.
So I converted it to a mortgage for him just so that I would have clean paper
Sure.
that I could foreclose on when he defaults, which I kind of knew he was going to do.
Mm-hmm.
And anyways, so we reset the loan, and then like he immediately doesn't make any payments. And this guy's like a master of like trying to create confusion. But it was funny because I was talking to him and he was like, "Oh, wait a minute." He's like, "I thought you sold the loan when you converted." I'm like, "No." And he's like, "Oh," and then like
Yeah.
he sent in a payment, but he's still behind, and now he's got like some tax issues. He was supposed to pay the delinquent taxes, and then he didn't. So I'm foreclosing anyways. But it's just funny that the guy thought he was dealing with a new lender and was just going to try to mess around. And he found out
Right.
I was still there. He sent in.
Well, I'm still here. I'm still here.
He's still there.
So we've had that where I've, closed out a fund and bought it, or and did like intercompany transfers and stuff. And it's
Sure,
like
sure.
this prior owner, and I'm on the phone. I'm like, that's great, but guess what? I was a prior owner.
I'm the prior owner. Yeah.
Yeah, you see that a lot with borrowers who, even when it's sold, like if I buy a loan from Jamie or from Wells Fargo, the borrower doesn't realize that we get all the servicing notes. So
Yeah,
we
right.
see that entire history. We see everything, all the conversations back and forth, and many different things that are going on that as a lender you see, and they don't realize that you have all of that. So
Right.
Therein why the due diligence and always requesting a copy of the seller communication or the servicing communication is critically important in evaluating the note.
Yeah.
Right. I have had it though where that the change in ownership causes the borrower to reach out where they were not doing that before, which is typically a good thing. So
And I've had them go dark.
yeah.
I've had I've had both sides too.
Yeah.
Yeah. They're like either like because a lot of times if the previous lender wouldn't talk to them or it was a bigger institution, they couldn't like sometimes they're excited to have somebody on the phone and then it instantly works out. Or if they're the kind of person who's a deadbeat, they might go, "Oh, okay, I got fresh blood. I can like jerk around and get some
I can jerk
runway
it
here."
around, and they'll
right.
find out that we don't jerk around very long. We're the one doing the jerking.
Yeah.
Well, I think the other thing sometimes too with borrowers is they'll put us in the same bucket as a traditional bank, thinking like, oh, we'll just ignore or whatnot, or not push certain issues. Or we've had some contentious, not physically or personally, but things where they were thinking like, oh well, I'm just going to drag this on, or file a 50-page complaint or in a countersuit and so forth, and they're just going to back down or whatnot because they're a bank. And it's like, no, yeah, I'm good. So
Right. Yeah. All right. We are almost out of time. Anybody have anything that they are looking forward to in their business in 2025?
I'm looking forward to tomorrow because I got my text back today of the $9 million in bids. I'm in the hunt on $7 million. So
awesome.
So we've between what we've raised last month and some of our payoffs and stuff that we've got closing in last week and going on, we've got, it's been a very good month. And so we just bid that one pool, and we actually have another pool last week. We got under agreement for about 1.3 million. So a lot of due diligence going to be going on.
Right.
So,
Yes.
yeah, a little bit of busyness.
And Chris,
Yeah.
I also heard there's another note investing conference happening in September. Is that right?
Yeah.
Yes, that is true. Called the Paper Trail Conference, that we're going to be focusing on what I'll call it the three-legged stool of note investing: private lending, seller finance, and non-performing loans. That we recently started advertising and publishing. If you go to papertrailconference.com, you can check it out, buy tickets, and we're trying to get speakers, all that fun stuff set up well in advance. And I know some of you on here are going to be speaking. So
Yes.
Awesome. Well, this has been really good. Anything, any parting thoughts before we hop off?
Always good having a discussion. You just never, kind of like Forrest Gump. Sometimes NPLs are like a box of chocolates. You just don't ever know what you're going to get.
sometimes performing loans are like a box of
that too.
chocolates as well. So let's
I've had that too.
This is period.
Absolutely.
You have to be adaptable. Let's put it that
So,
way.
I'll share one last one that I chuckled at, because I had a broker call me and ask me, this is hilarious. He's like, I got a loan for you. Would you have any interest? He's like, but it's $6 million and it's private, new construction. It's like, but the guy wants to secure it based off his like $75 million property he has. And I'm like, and he's like, he's got like a $10 million first on it, so plenty of equity and stuff, and gives me address, and I go look at this property, and I'm like, why does somebody who has a $75 million property need $5 or $6 million? Like, he has $65 million in equity. I'm like, why?
Sure, so, why?
So yeah, so I politely declined, because I do not want to give somebody a loan who's got like 1,000 times more money than I do, because if they go in default, then you're never going to see that money
You're
anyways.
you're on the bottom end of that one.
Yeah,
Mhm.
So
Yeah,
politely passed.
he'll be
But
doing the checking
if
around.
any of you guys want to lend against a $75 million property, I'll hook you up with it. So Jay, if you want to buy it from him, I know
I'll
you with all
pass.
your rentals, sitting on all that cash right now. So
I'll pass. We got rehabs going on right now, so I'm not that heavy on cash.
last thing I'll mention, and apologize because I never shut up, about like rehabbing and so forth.
Yeah.
I have a company now that will go take tons of pictures, but it's not the property inspection report pictures, or like a little like
Right.
dead bug in the corner that you can't see anything.
Right.
It's actually like full pictures of the rooms. They'll do panoramic, and they create floor plans for you.
Wow.
And they do inspections on like the roof, the HVAC, the electrical. So they provide like a report of all of that stuff as well. And it's like $175. So what I've been doing is I've taken that, then I've created a scope if I have to do any types of renovations. And then if I have a certain limit that it's going to be more work than X amount of dollars, I then got another company that does inspections. So they do basically, it's like, okay, I have a contractor, $25,000, flooring, cabinets, you line item everything.
Mhm.
It goes into their system. The contractor can put it in there. They'll go out, take all the photos, confirm it's done, give an opinion of what they think is, if it is or isn't, and then send you the report. So whether or not you want to fund it or whatnot. So some of the things that previously we used to have to do all manual, like working with contractors or trying to figure out all the photos and all this stuff.
Mhm.
After I don't know how many vendors of research, and it's gonna,
Wow.
I'm sure in a month I'll probably not like them and go on to another
Right.
one, but at least there's these companies out there that exist. So
Yeah. I'm assuming they use something like a Matterport to get the 360 view or something along that line, or
So no, it's I think they do it with just iPhones, but they just do like a panoramic on the iPhone.
panoramic view. Okay.
And that's why they can keep the cost down, because Matterport's usually are in the $400 or $500 range for some of that stuff, and Matterport is cool as well.
we don't pay that, so
For Matterport, you know how much you pay for
No,
Matterport?
not that much. I'd have to talk to Kyle. It's like 100 and something. That's what we
Oh
do.
wow!
So
Photos-
yeah,
photos
it's
and
very
plans?
yeah, photo and plans. That's how we market all of our rentals. Whenever we just do.
Oh wow!
Nice.
We have one showing. All right,
Mhm.
we don't show the property. We do
That's
it
smart.
all via Matterport, and then so they can get a virtual view. They send in applications. We make the decision. They get to do a physical walkthrough before they sign the lease. And that's it.
Sure.
Nice.
We adjusted to all that during COVID because we didn't want to be
Right.
meeting a bunch of people, and that has
Right.
saved us a ton of time. Oh my
Yeah.
gosh, a ton
Also,
of time.
people don't show up, you know.
Yeah. So
Ask me
those who
how I
are
know.
truly motivated and truly interested in the property, and we just, when they call in, we let them know, hey, this is all preliminary. You're going to get a chance
Right.
to walk through the property before you sign any leases or anything like
Yeah,
that. But
I like that.
that has saved us a ton of time.
That's a good. I'm glad I stuck around. That was a good pro tip. Everything that was just said, but awesome. All right, guys. Well, we're gonna hop off here. Thank you for joining us tonight, and to everyone watching, thank you for spending your time with us. We appreciate that. And gentlemen, I'm going to send you back to the green room here, and then we'll chat in a little bit.
Good seeing you all.
Thanks, everyone.
Take care.
All right. We made it.